Hi everyone, it's Sean from STK Markets here today. We've got Craig Bradshaw, the Managing Director of EQ Resources, which has been one of our shares in the portfolio for quite some time. Thanks for coming, Craig. How are you going?
Good, Sean. Thanks for having us on. Always appreciate the opportunity to get out and talk about EQ and what we're doing and getting close to our investors.
Craig, you've done some tremendous work at EQ since you started, I think, in last October. The balance sheet's been restructured. The revenues have been getting better and better in quarter. Your recoveries are better. Your processing's better. Your mining's better. The tungsten price is amazing. How are things at EQR apart from looking amazing with that share price going up and down, but a lot higher than where we got in it?
Yeah, look, the team that we've assembled at EQ has done a lot of really good work to get us on the path to where we are today, but beyond that, on a path to building a really successful company. We've had a few hiccups. We had a 150-year rain event in Spain, funnily enough, in the first quarter this year. So that put us about a quarter behind where we would have otherwise been. But month on month, our production is increasing. It's improving. We probably won't get to the full year run rates that we'd like to be at, around 1,600 tonnes a year for Barruecopardo and 1,750 tonnes a year for Mt Carbine, till probably around the December quarter, October onwards. But irrespective, we're at prices around $3,000 an MTU. We're getting excellent throughput at both operations, albeit at lower grades. That higher grade starts to feed in Spain, Barruecopardo, from end of June, early July, as we clear the water out of the base of the pit, which we recently announced over the last couple of weeks. And then in Carbine, we're into the Alant vein system. We're just steadily ramping that processing plant up to run at the higher throughputs and higher grades. And we're seeing a lot of positives there.
It just seems to keep getting better and better. You do have some setbacks, but I've noticed, Craig, you've got the team which you can adapt, fix things, and move forward. But that run rate that you're talking to, I just want to put some numbers out there. That's looking, if you look at your costs, which are around 350 a ton, if you're receiving 3,000,
$350 per MTU. So US $350 per MTU, 10 kilogram parcel of tungsten.
and they're around 3,000 at the moment to the income
Yeah.
that you're
So
receiving. So if you do the sums based on what you're receiving just on the back of a beer coaster here, it's getting close to 800 million free cash flow that you could be looking at in the future.
with ASX restrictions, we're restricted from providing guidance. But in terms of, if you have a look at that full year run rate, we expect to be, or our aspirational target, we expect to be running at, and you look at that at current prices and our expected production costs, they're the numbers that come out.
Mate, that's not even half your market cap. Like that's more than half your market cap at the moment. That's just
Yeah,
astounding.
yeah. I think it's one of those things that from a market perspective, historically, EQ has overpromised and underdelivered, and so I think people are taking a view that they want to see that EQ lives up to its commitments this time round. We produced 38,000 MTU in the December quarter last year. That was a fact. And we were ramping up, but we got hit by weather systems in Spain in the March quarter, as well as weather systems in Carbine in the March quarter. But it was a case of that 38,000 MTU was at an average price of around $800 to $900 an MTU. That 38,000 MTU at current price of $3,000 an MTU, that's three times the number based on the production we achieved in December. And the only reason that we weren't able to achieve those numbers was because of weather events, and weather events are transitory. So we're heading into a really good space with increasing production into fantastic prices, and demand is there. And that's the other key thing in this commodity is, we could go and sell 5 to 6 times more than what we currently produce. We've got a backlog of orders, and on a daily basis, we've got customers coming to us, or our customer coming to us looking for material because they can't get it. They're on 5-6 month delay in terms of tungsten metal powders, tungsten carbide, cast tungsten carbides from their suppliers because of the global shortage.
I think there's around 30,000 tonnes a year that's short at the moment, and it's not getting fixed anytime soon. There's no major
Yeah,
mines
correct.
apart from Almonte, which you're only talking a couple of thousand MTU a year. We're not talking the numbers needed. to fix the void. This isn't something that's going to change like the lithium bubble went up and then straight back down. The demand is real, the demand is there already, and it's only getting bigger.
And that's a great opportunity for us. So normally when you're trying to grow a business, you can either grow at market growth rate or you've got to take market share from somewhere else. But it can, if you're trying to grow your business, it can only be one of those two things. The great opportunity we've got today is the fact that that 30,000 tons is Chinese market share that they can't fulfill. And so the opportunities for companies like Almonte, like EQ, and a variety of other companies to step in to fill that gap. And even if all of the companies that are hopeful of actually providing tungsten are successful, most of them are 5 years out. And that's our opportunity. We announced in the last couple of weeks that we're going to expand the crushing and materials handling circuit at Carbine. That's going to bring on an additional 500 MTU a year of production based on processing the low-grade stockpile of 13 million tonnes at 0.07. Our opportunity is to actually go find additional material to actually substitute that 0.07 with a higher grade material, and that'll deliver more production units in the short term. And so, we recently announced the acquisition of the Sunshine Metals ground to the north of Mt Carbine. It's got historic workings on it. We've got to go do the work, but there's opportunity to actually then find additional units regionally. We announced the starting of drill program at Carbine itself. We've been drilling there. We're waiting for results to come through from the labs. Our intention is to convert resource to reserve at that operation, as well as extend the resource. And so we see a variety of pathways for us to actually increase production and increase the grade that we actually feed the processing plant on a consistent basis. Currently it can be a bit intermittent in terms of high grade and low grade feed. The intention is to have additional ore sources so we can get that continuous feed all the time to the process plant.
That continuous feed, I love how you call it that. These weather events that have impacted you in the past, your talent is knowing tungsten. You've had 14 years in it. You came from Masan in Vietnam. You're one of the few non-Chinese tungsten experts out there. We've known tungsten through the TMG facility in Vietnam. We know that a lot of the talent's in China because that's where all the mines have been. But your history, Craig, is fantastic. You know how to make tungsten work. But this continuous grade where you've had these weather events in the past, having these stockpiles, you'll be able to circumvent the wet weather events in the future. Because let talk to that. How can clients know that we won't have these problems in the future?
Look, one of the things that I expect from the management teams I assemble is that we learn together. And so within it, one of the things that already stuck out for us in terms of a risk, in terms of wet season and feed availability to the processing plant, but we didn't have the financial wherewithal or the time to actually go build stockpiles ahead of the process plant. The beauty of the ore that we've got at Carbine and the ore that we've got at Barruecopardo is it hasn't got any other major impurities that means that the ore degrades after you've mined it. And so within that context, as we head into the next wet season, our intention is to mine ahead and have sufficient ore available on the ROM pad so that we can't get ourselves into the same situation we had this year where the higher grade feed's not available because of the fact that we can't access it. And so, we've actually got to get our mining rates up and access the right area so that we actually then have excess material over what we're consuming on a monthly basis, but build those stockpiles, which is an insurance policy for wet season events in future. What we know is that weather's getting more unpredictable, it's getting more uncertain. So as a business, we actually then have to have risk mitigations that we've implemented so that from a customer perspective, customers don't feel that we actually have that consistent production coming through all the time. And obviously that's just good for business as well.
Yeah, it's not lost to me that these changes you're leading the way, Craig, and implementing that experience, those skill sets, you're planning for all fronts. And you can see the market believes you. The share price has come from, I guess, the mid threes, fours over the last 2 years, and it ramped up to the high 30s, consolidated for a little bit when that wet weather event affected the last quarter. We're coming up to the end of the quarter now where hopefully Carbine will have exceeded our expectations and we can have that share price pushing. The current valuations too, with our calculations, you're pushing towards the 300 index, which could be another wave of buying in the July August period, which is what we saw with Southern Cross Gold. The amount of buying that pushes that share price up just through natural buying. There's a lot of positives coming into the stock over the next coming quarters. The mine's getting fixed, the mine's continuous operations. You've got those index positioning. There's a lot of buying drill results that will come through and hopefully extend the mine life. You've got a lot of news flow coming out to investors. There's a lot to look forward to.
Yeah, look, it's interesting you talk about the impact of indexes and inclusion in indexes. I've seen some figures recently where people are talking about in terms of passive versus active investment. And some of the numbers there are in the order of $14 of passive for every $15 invested. And so inclusion in indexes becomes really important in terms of that aspect. And so I think our run up through to 39 was actually as a result of expectations and people front running the fact that ASX 300 inclusion was going to happen, and then when it didn't happen, we tailed off into the low 20s. We've seen a come back from that, and it's not unsurprising to see changeover in different investors as some people have reached a threshold and you have new investors coming in. But I think the current market cap, every likelihood we would get included in the September ASX 300. It's only done every 6 months. I think as we continue to reset the company, there's the opportunity to head into the ASX 200 in due course, and that then gets you into those passive flows that currently are not coming into the company today. And so that's positive, but equally it's about the things that we can control. What we can control is continue to deliver on the mine plan, continue to do the drilling. We recently also announced we've started drilling over at Barruecopardo, and so that again is about extending, increasing the resource, but also converting resource into reserve and extending the mine life. And then we'll also then shift our drill rigs once we finish drilling at Mt Carbine, probably around the mid to end of July. We'll then shift those rigs down to Wolfram Camp and we'll drill out the old Wolfram Camp pits. Those pits had a foreign resource estimate on them of 2.9 million tonnes at 0.268% WO3. We've got a program to convert them or upgrade them into a JORC resource and reserve. We've got discussions ongoing with the Queensland government about potential restart of those pits and then turning that into a hub and spoke opportunity whereby we would crush and sort at Wolfram Camp, bring that sorted material up to Carbine and process that in Carbine. Now we've got to go through different regulatory processes to actually get the approvals in place to do that, but that then becomes a potential ore source feed that then replaces that low-grade feedstock into the expanded processing plant at Carbine and then ideally delivers more producing units on the back of it. And so it's exciting times. We've got a market that will consume everything we produce and a fantastic price that we don't see that price going anywhere because a lot of the new mines people are talking about are 5 years away from production at least. And so from that perspective, we see a solid runway of higher prices for a long period of time.
That's just fantastic. We're big shareholders, me and my family, my investors, and we're certainly not selling at these levels. One thing we have noticed is that you are the largest producer in the Western world, yet our Monty demands a much higher value, obviously being
Yep.
listed in America. With the Critical Minerals Act and what's happening over there, does EQ have any plans to look towards doing a listing in the US?
Yeah, look, good question. I recently, myself and John O'Court, CFO, went to the US. We were over meeting with certain customers as well as investors, and equally meeting with a variety of parties to understand the perceived valuation differences from critical minerals in the US versus critical minerals in Australia. And what stood out from that is not just tungsten, but as you looked into rare earths, uranium, a variety of other critical minerals, it does seem to be a factor of about 5 times the valuation that companies are trading on in the US versus what they're trading on in critical minerals in Australia. And that extends to companies like Linus versus an MP Materials, ourselves versus Almonte. And so within that, we've been having a look at what's driving that and how do we make sure that our shareholders get full value for their investment in EQR. And so it is a discussion that we're having at a board level and exploring what that would mean for the company. And that's all part of our job as management and our job as board of EQR is to ensure that shareholders are getting full value for their investment.
It's certainly appearing that way that you are delivering, Craig. We've known you for 12 months. When you first came on as a non-exec, I think in June, July last year from memory. Then you came on at the managing director in October. I remember speaking with you in the first week for 45 minutes. And I tell you what, mate, your depth of knowledge was outstanding. It had been like you'd been in the job for the last 5 years. And then it dawned on me, you've just pivoted all that information from Asan into
Yep.
EQ. And the market's loved it. You've got the mines firing up, you've got the revenues coming. The tungsten price has certainly been the wind in your sails. But we think, and I personally think, the share price has got a lot to go. And as you quite rightly said, there are a few promises or over promises in the past. You seem to be delivering on what you said you're going to do. And I think the coming quarters, we should see some massive re-rating in the stock. And I'm just looking at that number now that I calculated when we were talking, approximately 800 million in free cash flow versus a market cap of what is it, 1.2, 1.3 billion dollars, depending on what day of the week it is. It's I'm not going to say one for one, but it's not much higher. There's a lot of space for this share price to go, particularly when there's no one really coming online that's going to plug that 30,000 tonnes a year gap. It's not changing overnight, so you've got a long time to really maximise revenue over the coming years.
In coming to EQ, one of the advantages is the fact that Marsan entrusted me as operations director, along with a group of other people, to then build Nuifao. When we built Nuifao in Vietnam, it was the first new tungsten mine developed in the Western world in 15 years. And so within it, there wasn't anyone who had the expertise, or certainly no one in the Western world who wanted to share their expertise with us. And so, because we're in Vietnam, we were on China's doorstep. Anything we didn't know, we went to China to go learn, because they were dominating 85% of the supply. So anything you needed to know, you could head up there and learn. You can't do that today because you get arrested for industrial espionage. But back then, when we cut our teeth in 2011 to 2014, 15 on building it, and then building the first new APT plant in the Western world, and give about 20 years, it was a case of we learned so much, but we're on China's doorstep. And so today we're assembling a team of people within EQ. Some of those have come out of that same experience across 12 years or 14 years in Vietnam. And so then in EQ, we get the benefit of leveraging on those skill sets. And that's one of the problems that a number of people who are coming into the tungsten space at the moment, they don't have tungsten under their fingertips in terms of understanding assets, building it, operating it. And that's where EQ, we've got an advantage. We've got producing assets, we're expanding existing production, and we've got people who've got a great depth of knowledge and understanding of tungsten assets. And equally, EQ in particular had excellent knowledge as it pertains to tomeras and sorting technology, and having developed their own algorithms for utilization in those sorters. And it's that combination of bringing the right people with the right sets of knowledge and have them actually heading in the same joint direction makes a massive difference in terms of building teams and delivering results. Now, I'm a fairly aggressive person in terms of my expectations of my people, my team. Sometimes I need to then moderate that in terms of setting expectations in the market. What I can guarantee is we'll get there. It's just a matter of what unforeseen events get in our way that we've got to overcome in the short term.
I think with the weather, you've articulated that well, where you're getting the stockpiles set up so you can get through these periods in the future so you don't have the downtime. It looks like you've got it all covered. And that ore sorting technology, when I was up in Carbine, it would have been 6 to 8 weeks ago, where they use the actual AI to, I think it's as small as a golf ball. You're looking for the tungsten in these tiny things, and it's not done by hand anymore. You've got the AI working.
I actually see that, right? We sort rocks between 6 mil and 40 mil, and we'll find the tungsten in that piece of rock down to the pixel level. And we'll get a 90% rejection rate to the waste side, 10% to the ore side, looking in the atomic density of tungsten in these sorts of rocks. And so that's actually a core strength of our operation, the skill sets we've got around that, because then the amount of mass that you have to actually then recover the tungsten from as it goes into your gravity plant is much smaller. And so it's certainly a competitive advantage, the IP we've got. Now, to be fair, not all ore bodies are amenable to ore sorting. There are ore bodies that the EQ guys have tested Myself, when I was in Vietnam, we tested ore sorting there, and it didn't work on our ore type. So it can be ore specific, but it just so happens that it works really well on our wolframite ore at Mt Carbine, and it works really, really well on our scheelite ore in Varuecopardo. And we've got 3 ore sorters in Spain. We've got 2 currently in Australia. We've got a third that'll go in as part of the expansion of the circuit at Mt Carbine. And out of that, we'll end up with 1 spare unit that then becomes critical to the whole hub and spoke development that we're looking to advance across the Mt Carbine district.
Craig, you've got all the ingredients sitting there, and it's been delightful to watch the tungsten price rally, the EQR team get itself self-organized in a position where it can actually deliver month on month on month, quarter on quarter. And I guess as an investor, I'm really looking forward to the coming 12 months, 2 years, as you expand these operations quarter on quarter. And each quarter, we hopefully see more revenues, more revenues, more revenues. And it just underpins the success that you've had previously at another tungsten mine. And I think that's what EQR is very fortunate to have you in the driving seat because, mate, you've done it before successfully.
Yeah, no, I appreciate it. And look, one of the reasons I took on the job with EQ, I like the people and I like the assets. And so it's a case of being given the opportunity to come into an asset where you like the people, you like the assets, and then help providing the framework for them to be successful is I feel privileged. I love getting out of bed in the morning and coming to work and getting the opportunity to do what I do. The opportunity to join EQ and do that for another, be it 5 years or 10 years, it's exciting times.
Yeah, I know Oliver and Steve Layton particularly were very, very happy when you agreed to take the managing director role. They knew you had what it took. And as a board, they did very well finding you. So hats off to them. And John O'Court's doing a wonderful job too. So, Craig, I know you're a busy man. Thank you very much. And we look forward to speaking with you soon. You've got the quarterly around the corner. So, yeah, fingers crossed we get rewarded there.
So now, look, the quarter on quarter, we're expecting production to continue to increase and obviously delivering into fantastic prices. So thanks for your time, Sean, and any questions that your investors have got about EQ and where we are in our future. Hopefully we answer that with different public announcements we make over the next month or two, but equally happy to field questions when they come through to yourself.
Craig, you had a smile on your face there when you answered the question about the quarterlies. So that was good. I'll read into that what I can. But you take care, mate.
Yes, thank you.